Well, black swan events, by their very definition, are impossible or virtually impossible to predict. And if you lived your life or your investment principles were solely around avoiding black swan events, you'll probably lose out on your market return. So it's always good to be mindful of left field events, such as an extreme black swan. But from a practical investment perspective, it's a lot more logical to try and look at market turns and asset classes.
I think we are a little too frightened of black swans as a thing. I think we have, having had two extremely profound financial resets in a decade, the tech reset and the financial crisis, of different natures, but they both effectively caught the world's investment community napping. I actually think the world has reacted extremely well to the change in political direction and regime that populism, as crystallized in Donald Trump and several changes in control in Europe, have demonstrated. I think if we'd had that 10 years ago, we would have had a much more profound reset of our risk appetites and equity markets particularly. So I'm very encouraged that actually our defences against black swans are quite high. We have a system where we are scanning the horizon for them in a way that we hadn't done for far too long. So we're back to normal cycles, but with a embedded risk premium that now rightly reflects a uncertain near-term political direction.
I think that this is where raw data can be dangerous, because raw data assumes that the future has the same pattern recognition as the past. And our job is to look at all the possible eventualities and try and say, how can we protect or insulate, mitigate the tail risks at either end of the spectrum, the implausibly bad or the implausibly good. How can we get some exposure to one end and minimise exposure to the other end? So there was that famous example where an investment bank strategist said this would be a 1 in a 5,000 year event, but unfortunately it occurred 3 times within two years. And you can't rely on the past being a guide, perfect guide to the future.
So 2008, we all had the massive black swan event, and now in a way we keep on looking for the black swan behind every tree. I think the fact that we're all waiting for it means that it probably won't occur in the near term. So I found a recent definition of a black swan: highly unlikely event with potential severe consequences. But then there are 2 others, animals, other than bulls and bears, is the elephant. That is something we talk about but do nothing about. And then the grey rhino. It's a highly likely yet ignored event. So I do think we're in a different world. Yes, you will have the odd black swan event, but the markets are not confined to 2 more animals. I think we should expand it to 5.
So I wouldn't say we have more black swans, we need to be worried about it. I think we need to be prepared for greater volatility, but that's just because we've had so low volatility for so long. That's a natural progression to what people should be prepared to have. So to anyone who owns equities now, who has not enjoyed the experience over the past year, where things have got a bit more volatile, I would say to them, then you're not suited for equities. You need to sell your equities and go and do something else for a living, because this is here to stay.